The broadcast is now starting. All attendees are in listen-only mode.
Good afternoon, everybody. It's Brian Caprice from Keep Trading Simple, and welcome to today's current market analysis on identifying potential opportunities. Pretty excited to be with you guys today. We are now almost at we're almost there. The halfway point through October. I can't believe it already. You know what that means? You are seeing holiday decorations, snowmen at the stores. It's crazy, right? It's not even Halloween yet, and we're already starting to see end of the year holiday decorations. So you know how the fall gets. It gets a little bit crazy, and the markets have been no different. Some kind of a crazy few days as far as what the news has been talking about. So it's a great day to be here, and I'm glad for everybody that came back and is with us today. So markets have been pretty active in the last 24 hours, particularly in the currencies market, but also in the U.S. stock indices. Again, kind of Friday news, what was going to happen, what didn't happen on Monday, and then today is kind of a retrace and kind of a reset of everything out there. And we'll dive right into that. So for those of you that are brand new to me, I'm going to kind of go through a who am I real fast. If you guys are new, my name is Brian, obviously. I run a company called Keep Trading Simple, and what I try to do is remove as many of the distractions from the market as possible. All right. The reason I do that is I feel that there are many tools and secret sauces out there, and at the end of the day, most of them don't actually help traders. They don't help you understand what's happening or why it's happening, and that's what I really try to dive in and focus on. So what I try to do is I try to give you guys a golden nugget, and I mentioned this for any of the new people. I want you guys to take something away from today's presentation and something that you can use in your trading, or something that you didn't know before, or something that makes you look at things slightly differently. Right? Those are my goals whenever we do these presentations. And again, they're every Tuesday. Let's see. Oops, I had one little pop up there. Sorry about that. So I've been trading since about 2000. I have seen obviously many ups and downs: tech bubble, housing bubble, election, bubbles and such. Definitely one of those things that it's been interesting. It's been a very fun ride over the last, God, I hate to say this, but like over the last 20 years, right? Looking at the different markets. I started the way that many people did, with stocks and traditional options. Found out about currencies, started trading that market, learned about futures. Obviously found Nadex a few years ago, and for me, it was a perfect kind of addition into my trading. It matched my risk profile and some of the other ways and strategies that I like to trade. I am not a believer, and this is one thing that everybody is like, what, really? I'm not a believer in sitting in front of a computer for 18 hours a day being a trader. I love technology. I love setting alerts. So if you hear me talk about I have an alert set here, again, each platform typically has some way for you to do it. That's what I mean. It's platform specific. You don't need anything special to be able to do it. It's typically free with many platforms out there. And again, if you guys need one of those, there's Nadex has charting, as well as IG does as well. So a number of different ways you can do it. I had been in one of the big three advisory banks. I worked as an advisor for a little bit and realized that it was nothing like I thought. I did take something positive away from that arena, and the fact that I didn't really know much about bonds and what kind of relationship and really how powerful the bond market was. I had no idea of being on the outside, and going on the inside, I learned those things, and it was great. And I left and realized that my true passion was in teaching. So again, that's really where kind of the golden nugget comes back. Like I want everybody to say, hey, listen, this was worth my time today. I'm glad I did it. And again, that's my goal, is for you guys to get something out of today. So before we begin, obviously, because we're going to be talking about charts and potential trade setups, we need to cover a Nadex risk disclaimer. Trading on Nadex involves risk and may not be appropriate for all investors. Trading can be volatile, and investors risk losing the cost to enter their transaction, including fees. The information presented within this presentation is for informational and education purposes only, and should not be considered an offer or solicitation to buy or sell any financial instrument on Nadex or elsewhere. Now, any trading decisions that you make are solely your responsibility and at your own risk. Past performance is not necessarily indicative of future results, and Nadex contracts are based on underlying asset classes, including Forex, stock index futures, and commodity futures. And for those of you that didn't know, Nadex is a registered trademark of the IG Group. So what are we going to cover today? First things first, we're going to cover the upcoming news events. Okay, there's many different websites out there. The one I use kind of has a scanner built into it. There's many that we can use, but it's important to understand where, and again, when are the best trading opportunities throughout this week coming forward. Today was a little bit slow. Again, 8:30 gave us some good data today. At 10 a.m., just a little while ago, the BOE Governor Bailey spoke. And then again, let's lay out the rest of the week, because one of the things that I love, one of my favorite things to do with Nadex is trade news events, economic news events. Not really like news what you hear on like the different news programs out there, the many C's, but again the published economic news releases that happen on throughout the world. I love pairing those releases with Nadex based off of my other strategies that I use. After we do that and kind of formulate that game plan for the rest of the week, then we're going to cover indices, then Forex, and then commodities, and kind of just go down that route. I had this other button up here. I already hit the one button and it popped out on me. Sorry about that. All right, so let's dive right in. Let me drag this in and pull this across. So first things, guys, in the last 24 hours, you can see there has been some movement, right? The euro dollar, the pound yen, all moving pretty well. Dollar Swiss is actually up 50, which is actually a decent move for the Swiss. But you're seeing a lot of movement in the pound. And again, we know why. Obviously, the BOE, Bailey speaking this morning, just a little while ago, about 2 hours. That's obviously causing a bunch of movement in that currency pair. But looking as far as, again, what I mentioned, the news releases today, everything is done. There's nothing else we really need to watch out for. But throughout the rest of the week, we do have quite a bit of data out there. Now, if you are just a U.S. stock index trader, a lot of these things on here aren't going to really make too much sense to you, and it doesn't necessarily matter. They're just different trading opportunities. But there are certain things that I would be definitely looking into if you're just a U.S.-based trader. Any of the Australian news will move gold. Obviously, gold is associated with commodities. Again, that will move both gold, oil, silver. So there's numerous trading opportunities that come off of that. Anytime you see Chinese data, and again, Sunday night, we have Chinese data coming out, the GDP numbers quarter over year. Kind of a weird thing, the quarterly over yearly figure. But again, the world is so globally linked at this point. You got to step outside of your boundaries if you're only here to trade stock indexes. Okay. Going into tomorrow, though, we have some very important data. Now, I'm not 100% sure why this would not be marked off as red. CPI and PPI are both more or less gauges of inflation. I may say, why is that? Why should that be so important? Well, there is one commodity out there. It's that that shiny one, right? Gold, that is directly linked to inflation. Okay, when we see inflation, gold goes crazy because everybody wants it. Well, this is not really showing me that we have any type of inflation going on right now, right? The two out of the 0.2 increase versus the 0.4. PPI is also the same thing. And again, you don't have to know what PPI is. You don't need to be a master of this one. But again, it's the producer price index, and it'll tell you right here. It's the change in the price of finished goods and services sold by producers, right? So when we have lots of inflation, this goes up. When we don't, it goes down, right? And it's considered a leading indicator for consumer inflation. Again, gold prices, okay? So if you like gold and like trading gold, it's important to know when those are. After that, all we have tomorrow is at 10:30, we have oil. I don't know if you guys watched the oil chart. The oil chart has been crazy. Last week, the thing was accelerating forward. This week, it was collapsing and just falling through the floor. It was like, what the heck is happening to gold? Again, I think gold pricing went up because of that hurricane and when there was no reported destruction, I guess, right? Oil started to collapse back down again. That inventory report is, it doesn't show up here, but it's tomorrow at 10:30. Okay, so that's always a great one to trade in the commodity section. And then Australian data, they're more or less, they're non-farm, their unemployment and their unemployment rate. One thing that's interesting to note here, and again, if you're not trading at night, you're missing out on some absolutely amazing opportunity, okay? The Australian news typically that happens about 8:30, between 8:30 and 9:30 at night Eastern time for me. Awesome stuff. Look at this. While we're talking about unemployment rates going down, like Canada last week had a great number, right? Last week, Canada had their unemployment rate went from 9.8 down to 9.0, and they hired twice as many people as they thought. I told you guys this could be a big one. This week, we have the same thing, but for Australia, okay? But what is Australia forecasting? They're actually forecasting their unemployment rate is going to go up and that they're losing jobs. The last time we saw that was when the coronavirus just started kicking in, and we're already starting to see that again. So it's a little bit interesting. And again, this could really be some nice big movement with the Aussie. Again, if you're not trading that at night, do yourself a favor. Check this one out tomorrow night. Thursday morning at 8:30, okay, we have the unemployment claims. Again, this number has been kind of squirrely, right? They kept missing it. And then all of a sudden, October 1st, they were like, oh, we forecast too high. We were too negative, and it came in low. And then I was actually really surprised by last week's number. It came in at 820, and I figured, all right, all the people from school that aren't going back to school and those jobs, all that'll be worked out of the system. I actually assumed it would be around, probably around 820, 825-ish. The 840 really surprised me that it came in that high. But again, what did that do? Provided movement in the market. Some great trading, as well as the Philly Fed Manufacturing Index this week as well. Now, Friday, we have core retail sales. I don't know if you guys know, today is a special day in online shopping, right? I'm sure you guys all know. And interestingly enough, my wife yesterday was doing pre-Amazon Day shopping. Today is the first day of Amazon shopping. Tomorrow is the conclusion of Amazon Day shopping. And then I believe that like Thursday is the post-Amazon shopping. Like I believe there's like a day, it's like 5 days, right, with deals. And I will say I did partake already today. There's a mouse I was looking for to replace one that got damaged. And I got it like 65% off. I was pretty happy about that one. I'm not a big shopper, but hey, if I can get 65% off, I was pretty excited. So retail sales is basically you and I. What are we purchasing? Now, this is important for the overall market, particularly the S&P, right? Even the NQ a bit. Everything is technical these days, but it will carry over into all the U.S. indices. But retail sales is how much are we spending? Are we confident in our spending, right? And you can see it's a little bit of a mixed number. Retail sales in general is going up. Core retail sales is supposed to go down slightly. Both are positive, which is good, right? So again, that could lead us into kind of a positive Friday, right? As well as University of Maryland consumer sentiment. Again, when this is good and stays positive, always a good sign when the consumer is ready to spend. Because again, when the consumer is confident, when the consumer feels good, when the consumer is not worried about, am I going to lose my job next week? We tend to spend money. When we spend money, what does that do? It makes earnings good and makes everybody happier because the stock market's going up. And then again, you guys know how this works. We have Amazon Day now, we have Black Friday, and we have the election, and we have Black Friday, and then we have Christmas. That the Christmas holiday, it all starts to add up, right? And then Chinese New Year and at the end of January. So there's a lot of holidays in the next couple months. All of them involve us spending money. Okay, so getting these early reads on retail sales is definitely a big, big mover. Now, this is technically next week, but we don't meet till Tuesdays. This GDP number for China, and again, I don't know how many people on this broadcast look at Chinese data. I do because, again, China they are a producer, right? They produce a lot of goods for a lot of different countries, and kind of seeing what their economy is doing kind of it gives us kind of an overall look on a global scale of what manufacturing is doing, okay? Now, there is no forecast listed for this one, but you guys have seen kind of where this is going, right? Looking at it previously, I mean, the forecast came in at 2.2, and it came in better than expected. Prior to that, it was worse than expected. Then in January, again, before COVID kind of kicked in, it was right around that 6 mark, right? So it's kind of interesting to see how China is recovering and what, again, one of the things about having the economy that China has is they can produce as many things as they want, but if people are not buying them, they're not just because they're going to keep building stuff, right, and storing it, right? Because anybody that's building products doesn't want a huge surplus of products, right? I don't know if you guys heard this weekend, the UK is kind of closing back down again for wave 2 or I don't know, COVID 2. Whatever it is, but there's a 3-tier system where they're starting to close things back up again. That's not necessarily the best sign for other countries that are producers like China. So seeing kind of how this forecast is kind of gives us an idea of where we're heading, right, into our holiday season and what surplus is going to be out there. So it definitely could move the markets around for Monday morning. And then Monday morning, you got a little bit of BOC, Canada Business Outlook Survey, which again is important. They've been doing quite well with their numbers and the monetary policy meeting notes. And then we're back into Tuesday. So, right now, biggest thing that we're looking at, this morning, looking at the hottest news, you can see that the BOE, Bailey talking about need to, consider negative rates. The EU will continue to work on a fairer deal in the coming days and weeks. Now, remember, the deadline is October 15th. That's what the UK threw down and said, hey, listen, we need to know by the 15th. That is our deadline. Last week, the EU said, hey, listen, we're going to call your bluff. We don't care if that's your deadline. We're going to call it. Yesterday, France basically took a step away and said, hey, listen, I think we're really close on a deal. This is great. we're under the gun, but we think we could do something. Which is interesting because I kind of stepped away from the Euro line of, hey, we're calling their bluff. We don't care. So pretty interesting. And then also, guys, I don't know if you saw this or not, J&J's virus paused, didn't cancel. It just paused because they wanted to look into an adverse event. I think at this point, the market is going a little bit overboard with this one. Media is taking this one away and making it worse than it actually is. I don't know. I was in the pharmaceutical industry for a little while when I first got out of college. Not a little while. I mean, it was like 10 years, but it's one of those things. You got to understand things like study design and what this means that they paused it to investigate doesn't mean that it's ending. And yet that's what everybody's taking is, oh, that's it. It's over. It's done. It's not. It's just a pause. It was one patient, after a participant. So I don't know. I think that's going to be the name of the game right now. Going forward in the next few months, the first, obviously, the biggest thing we have to look at is going to be the election. What type of headlines are we seeing around the election? What are the forecasts? What are the polls? Those are obviously a huge driving factor. We have the holiday season coming up, so things like retail sales are important. And again, this week in particular, we are on, again, quote, Brexit watch. Okay, we have 2 days to the deadline, right? The 15th is technically the deadline of when they want the the agreement signed by, or I guess at least agreed to in principle. I think they believe signed, but I think they will kind of give them a little bit of extra room. That's going to be a big one. What's going to move this pound? But things like negative interest rates that we're seeing, obviously big market movers, right? Brexit is obviously going to be a big one this week. That has the ability to not launch this thing all over the place. Obviously, election news, things about vaccines and coronavirus. Obviously, that's kind of what's still crippling the world right now. Also going to be absolutely gigantic movers this week. So we got to be, this is definitely a week where Nadex is one of the, in my opinion, again, this is my personal opinion, it's definitely one of those products that you need to make sure that you are watching and you understand how to use them, okay? Again, with things like news having those limited risks in there, there's times where binaries are better than knockouts, and vice versa. There's sometimes that I really, really like the knockouts. And these, again, a lot of these are working great for, some of the shorter durations as well, okay? It's not just about dailies. For me, I actually very rarely trade dailies. I actually prefer the 2 hours more than anything else. So a lot of different things we can do this week. So pretty exciting that we're seeing this much movement, negative headlines, 2 days to the Brexit deadline. Vaccines, again, Johnson & Johnson is down big now. We can't trade it individually, but you guys can figure out what index is in. What happens if tomorrow we get news that's saying, okay, it was non-related to the vaccine, trials full speed again. Everything that was eaten away in J&J will do what? Probably bounce back right back up again. Okay, so yeah, a lot of stuff here. All right, a lot of stuff going on this week. And again, I know I talk fast and I get excited about this, but again, this is a passion for me. I love seeing this much opportunity out there on the board. Okay, so let's go over and let's dive right into the indices. So we're covering those first. So last week, if you remember, let me put the timer on here. So we're sitting here. Last week's date was what? It was the 6th. We were sitting right down in this level here. Okay, and if you guys remember me saying the 6 is right here. We were looking for kind of an area, and we were looking for a kind of a break. I mean, we had been through this zone right in here, this kind of 11,500, right around there, and we'd hit it a few times, 1, 2, 3, 4, and we were really waiting for a break. We got the break late last week, and a lot of this kind of punch forward, right, this break above the 11,766, this was a big mark that we were looking for. The reason why was because we had such a huge drop, and this is just one single 4-hour candle. This was during the original collapse over here, right? Original collapse kind of punched to the downside. This is just such a huge move to the downside. It's what do we call a racetrack. There's no kind of price action, no indicator, no nothing besides maybe magical lines you draw in there. To slow this down, we were going to see a push back up. So we're waiting for a break. And all this move last week was all the hopes of, and I can play it out for you, I'm willing to sign a stimulus deal for X number of dollars, right? For $1,200, right? Everything was about stimulus. I guess the Republicans said, okay, we'll go from 1.5 up to 1.8. Trump said, I will sign it. So everybody was preparing for a signed deal. I mean, figure if you come halfway, they're signing it. Well, unfortunately, that didn't happen. And now we're starting to see some of the choppiness, right? The other side had to come down from 2.1 to 1.8. It was literally smack dead in the middle, and that's what they said they were signed for. But it's not done now. And this is where a lot of the choppiness is now happening because people are thinking, hey, I was supposed to get a check for $1,200 approved that was going to be sent out really, really fast. I mean, again, just think how exciting that is for things like retail sales. At this point, you pretty much know if you have a job or you don't have a job. The spring was a little bit different when those checks went out, right? You didn't know if you were going to lose your job next week. If you get a check for $1,200 right now and you still have your job, you're probably going to start buying Christmas presents, things like that. Those are good for retail sales numbers. So, yeah, not getting it now is kind of like, what's going on? And we're seeing some chop here, okay? Right now, what I would do is I would be focusing on, I'm going to leave this white over here. This is where that racetrack is. I'm kind of focusing on kind of this level right here, right? Let's delete this just so we don't confuse everybody. Let me delete that real quick. I'm going to change this to a light color blue, and I'll show you why in 1 second. Right now, I'm looking for the area between kind of here, right? This is where we had like a little bit of basing right before this huge collapse. Kind of looking at this as like almost like a top and a bottom, for lack of a better word. You know, the 12,354 and the 11,618 areas, those are the last times we've seen a huge push in price up and a huge push in price down, okay? Now, there's some chop and things like that in here as well, but those are the two areas that we need to be ultra sensitive about, because any type of news or push into those levels, those are areas where buyers have stepped in and launched it high, and sellers have stepped in and pushed it low. So do you think there's still some people that would love to sell it here? Probably, right? And do people probably still want to buy it down here? Like if you could get this on sale, knowing that that went up, would you get it? Yeah. So that's kind of the range. And right now, I would have to say, I am more in kind of the bearish camp with the NQ, only because we are very, very high on the curve. We're closer to these guys than we are these guys. As far as setups go, we can't obviously use a 4-hour. We've got to kind of drop it low. And you can see this morning, we actually had a bit of a setup, and now we're kind of channeling sideways, right? We're seeing that this is our low area. This is our high area. We did have a punch down and this kind of failure to go higher, and we drove it all the way across. So, you know, had you been trading this morning, this triggered at about 8:30 this morning. You know, so decent level, as well as here was that 10 o'clock reversal in the morning. You guys hear me mention the 10 o'clock reversal all the time. There was kind of the 10 o'clock reversal / kind of profit target hit. So either way, it's been decent this morning, enough movement back and forth. Had you taken this short again at the U.S. market open, as we took this, we punched down and kind of came back, you can see that it did hit its 1 to 3. Let's go do the thing on me there. We ended up going through our 1 to 3. Vice versa, on the downside, it was kind of the same scenario, right? Right here, here's your 10 o'clock reversal, and we ended up getting really, really close before rolling back over. And again, at this one, I would have probably taken it off a bit early because you did have a level of basing here. All right, so looking at it now, kind of what can we do with it? As you can see, that 12,354 is sitting kind of right above. We kind of could need a little bit more of a punch forward. I do like this level, and again, this level here on I know I'm a little bit low here, but 12,203 is kind of an area that I'm feeling that if we get back up there, I could be willing to take a short, depending on the time and if we have news getting there, right? I think that's a good level. It dropped, it based, it pulled up, seller stepped in and did not let it rally any higher, and then punched it down. Pretty decent, right? And the buyers, what did the buyers do on the other side? They let it come down here to about 95, 98%, and again, before this one kind of rolled back over and kind of pushed up a little bit higher. So overall, I think this one is pretty decent. Again, I'd like to see it kind of clear higher so we can get shorts. This level here we're bouncing off of, I'm not too concerned. So on a minor term, a minor time frame, I'm kind of looking at this as being my top and bottom, my range that I'm looking to play. Now, again, time of day matters when we hit either of those two. I do prefer morning trading with the 2 hours on any of these, but there is afternoon plays. For those of you that like those end-of-day rallies, I think this level, probably not willing to take this for an end-of-day rally, but if we can get down to this level here, I think there's a potential end-of-day rally at 11,911, or vice versa, if we can pop up again, some type of a rollover back to the downside. So I think either of those two is good. S&P is got kind of a similar setup on the hourly. Looking at this one, big picture, you guys can see, same racetrack that we are in, one gigantic candle. This one is kicking in, right around the 35.71 range, and we didn't get there today. I could have drawn, this level. I like the way that candle formed. And again, there was our drop, there was our base, there was our pullback and failure to go higher, punch to the downside. So this would have been a short trade setup this morning. At this point, it's probably okay. I mean, we're at lunchtime now, so it's it's got room to run back down, right? Let's see on the 30-minute. Yeah, kind of the same trade setup. Not much different on this one. And again, that one is kicking in. Let's see, when did this one start? About the same time, that 8:30 time frame. This one just didn't really have a really high quality level for it to bounce out of. That's why we're seeing that our lows are still lower here, and our highs are also lower, signifying that we are in kind of a downtrend, right? Kind of a down, a trending channel. You could draw it, something along these lines, if you guys really are into drawing things. But again, I do think this one will come back down and probably tag this 1 to 3 later on today. Where you can trade, going farther in the week, I think on hourly, I do think this area here is one we need to watch out for. We do have a Harry Potter trade setup, kind of a continuation short all the way back down here, but I think that's a little far, and that's kind of a break of around 34.72. I don't know. I don't know if we can make it to Wednesday before kind of hitting that level. I just have a feeling that I don't feel that it's good. I feel like I'm just looking at the news here. Based off some of the news, I just think we're going to have a harder time getting down there. I'd like to see this come down in base. Now, remember, if we do get down to this level, one of the things I'm looking for in this is a kind of a drop and then a rally or not a rally, but a drop and then kind of a level of basing, right? A level of basing before we kind of punch lower. All right. So just kind of keep that on your radar. I don't think it's quite there yet. Today, obviously, the short was about the only thing we have going for the S&P. And like I said, the S&P is it's got a little bit more room to run. I'm kind of showing, let me move this over here. If I had to draw kind of where my tops and bottoms are in this one, it would be in kind of that range right now, right? Up here and right here. Again, this was a level of basing. It was decent. It retested and then punched higher. So, yeah, that's kind of all we're looking for right now. The Dow. The Dow had a great move, and there's a couple different trade setups here that I want to make sure that we cover. And again, it's kind of following up, what we talked about last week. First thing first, we had this 28.526. Over the weeks, guys, I've mentioned, and for those of you that are new in the channel, remember how when we have a zone that we're looking to kind of go through and break, how many times can we hit that zone? Typically, right? There's no set rule in this, but what is the typical number of times that it touches a level before it finally breaks, right? The magic number tends to be 4 in most cases. Well, here was number 4 right here, right? Actually, this was number 4. It touched again, came up and based, pretty much telltale sign, came up and then finally broke. When we're looking for Harry Potter trades, what are we looking for? Again, remember, this is a punch through a level, a retest back to the level, which establishes our risk, and then a punch higher, right? Well, what do we have right here? Here is the basing. We're waiting for it to break. No space, no space. We got our space under. We pulled back, and boom, we punched back up again. There's our Harry Potter trade from yesterday. Now, what do we do with this? Now it kind of rolls back over. So I'm going to delete this one because we have the other one on. As you can see, we had a failure to go higher. A nice candle, a punch down. Again, kind of based, gave us those descending wicks, punch lower, came up and retested. And this one retested at about 1 o'clock this morning, has done nothing but kind of drive lower. Now, not willing to take this one long. I'm waiting for this one to reset. This is a lot of chop just back and forth. There's not really a whole lot we can do in here, right? At this point, the same level that we used as a launching point, I'm kind of using to the downside as well. So this level right here, I'm going to change this to, oops, no, not delete. Change this to yellow. I am looking for this for a complete reversal to the downside, okay? The same thing that we had set up here, extend that across, right? Extending that across. What I'm waiting for is I'm waiting for it to come down. I'm looking for a base of some sort, right? I'm looking for it to break below, base, give us a little bit of space under, pull back, and then my risk is established. I'm looking for this thing to drop down to approximately 28,266. Okay, 28,266. If it hits this level and does this and goes higher, no harm, no foul. Didn't get into the position. It didn't meet my rules for entry. So again, I'm one of those people that I do have a fixed set of rules that I follow, and that's what I'm looking for. It's the same exact trade setup here where we based in, we punched above, we retested this pattern and punched higher. I'm looking for the same thing, but only in this direction. Okay, may hit, could potentially hit later today, could potentially hit tomorrow, could potentially hit Thursday. It may not hit till next Monday. It's something that I'm sitting there waiting for because once the rules trigger, then I'm willing to get in. All right, so that's the 3 indices. Let's go across and go to the currencies. So one of the levels we talked about last week was up here, and it was at, let's see, right here so you guys can see it, 72.27. All right, so the Aussie has been kind of somewhat of an overperformer. Okay, we mentioned that we have these strong pops up, and these are called racetracks, right? Very, very fast moves, and all it did was it basically gave us a parabolic retracing. It ended the week last week right inside of the zone that we had talked about on Tuesday. Now that, this zone has been there for a while, right? Click this back. You guys can see we talked about this and said, hey, listen, we got to go a little bit higher, and there would have been that zone. Okay, there is our zone from last week. Right now, is there much we can do with it? Not really. It's really pushed back down to kind of low levels again. It triggered, it moved. It took a long time though. So this was a little bit harder of a trade to trade with Nadex because literally one of the things that you do need to worry about with Nadex is expiration time. Okay. It took a long time for this to happen, and then all of a sudden, boom, right back down and got retraced. So right now, overall, I have to say, we are still sitting very, very high on the curve. This one is out, so let's delete this one right now. Let's advance those forward and see what we have. We had a little Harry Potter trade set up here, didn't give us entry. Again, you guys can see it came down and based, so there's probably a short here. But let me delete this off just so we don't confuse anybody else. Delete. So right now, jump into a 4-hour. I'm kind of using this as my upper and lower quadrants for range, or my upper and lower. I guess we talked about this last week. It's not a quadrant when there's 3. I guess thirds, pieces of a puzzle. Right now we're in the middle. It's been a very, very big push to the downside. Australian weakness, and again, the Australian data, looking at it with their unemployment rates going up, none of those things to me screams that all of a sudden we're going to see Aussie strength coming back into the market. I'm kind of waiting right now. We're in this middle 30%. I like the way that this punched off. The level is actually a little bit lower than where this basing was, but levels down here in kind of the 70, like 71 to like 71, probably 80-ish range, this 20 pip zone down here. I'm kind of eyeing this up for that unemployment or the Aussie news tomorrow night. That can be a big blockbuster for this one. And again, it's expected to be down, so the market is planning for negative, right? If the market is wrong, okay, and again, is the market ever wrong? Yes, the market is wrong a lot. But if we're sitting down in this area, oops, hold on, let me move this out of the way. Change the color of this one. If we are sitting down in this area, okay, this is a potential area for a news miss for buyers to step in. Again, they've already stepped in once in this big collapse and reestablished a rally. This is where we see a lot of movement up. Okay. Everybody always asks, well, how would I play something like that? I'm not accustomed with the Aussie. I'm not comfortable with currencies. Well, here's how. Okay. First thing first, if you've never done it, go over into demo mode so that way you're not risking live money on this one. Look at some of the smaller duration binaries when news is coming up. Now, this is a 4-hour chart. So again, this is 20 pips on a 4-hour. It tends to be a lot, right? But there could be knockout brackets that are down here where their floors are down here, which gives us a fixed amount of risk. There are 2-hour binaries down here as well. Again, depending on the time we hit this one, there are longer duration binaries that you could trade. There may even be a call spread somewhere down here that is giving us a very small level of risk, giving us a good risk to reward ratio coming off of better than expected news and a level where buyers have stepped in. Okay, so I like this, the 70.83 down here and the 72.34. As far as top and bottom, I think both make decent amount of sense there. Okay, Aussie yen, right? Aussie yen has given us the same type of bounce, right? Coming down here from the 30-minute, right? It gave us the same thing again. Here's that bounce pattern. You guys can see that it came through. It ended the week. It gave us a bounce here, gave us a second bounce, and then drove us all the way down. This one moved a little bit faster, and it's kind of the same thinking. It's using the same zone. So, no major surprise there. That 76.30, we've talked about this 76.30 for 2 weeks now, and finally we're able to get that entry up in here. Now, it did enter a bit higher, but there was the bounce through. Some people may say, hey, wait a second, why didn't we take it short here? And it's like, no, we're looking for a confirmation. We got to know that it stops. It punched above and went up just above, and did we get the confirmation? No. Did we get a confirmation up here? Could we have taken it off this red zone? Yeah, we could have. But here was the original zone. Here was the pullback. There was the retrace. Here, I'll just move this across. You guys can see it. There, there. And again, like I said, it would be in the middle, right? And again, this is a simple pattern. This is nothing that's, out of the ordinary, right? There was your punch. There, and it's the same pattern. And you guys can see exactly where it started running into kind of little hiccups, right? Where buyers had stepped in. So it's just a confirmation pattern. I know a lot of people throw that terminology out there about, oh, what's a confirmation entry? What's a confirmation pattern look like? This is just a simple one you guys can use. So yeah, if you'd taken it and got really aggressive, yeah, you probably would have got stopped out. You could have waited and got in, taken a small position. But here was the setup that we talked about last week. And right now, we're kind of sitting right in the middle of the range, right? If I use this from top to bottom again, I'm kind of looking at this as being my range. On the 4-hour, you can kind of see it's the same idea. That same level at 76.30. And I think down here, the 75, I mean, it's hit 1, 2, 3. This would be hit number 4, which, again, makes it a little bit more suspect. But I do think that for any shorts that you have, I think that you need to make sure that you're out probably before the 75 number. And then we can kind of see if we base, right, if we base at this green level, could we have a Harry Potter to the downside? That continued momentum? Sure. And, technically speaking, I mean, that's putting us right here. That is not a horrible place, right? Because the real pop happened here. So there could be, and let me see. Yeah, that's actually right where the 1-3 is. Yeah, so that's not a bad little trade setup if we punch through here. And again, what does that look like? The same thing here, but opposite. Come up, base in there, wait for it to punch through, and it would be the same thing. It would be this push, this piece right here, and that's what the Tesca's got to look like. After price comes down here and base is right in here. Okay? So same thing. It's a momentum continuation trade back to the downside. Make sure you're out before the start of the move here on the 4. Okay? Euro yen. Gave you guys this level last week, the 124.96. As you can see, it's been a great kind of selling opportunity. It's continued to push lower. We talked about levels down here, and again, this was the start of this large move, this 124.00. You can see that we had a little bit of a hiccup here on the hourly, but it continued to punch through, and now it's pushing down through this other piece. So we didn't really necessarily get the entry we're looking for. If I continue, here, I'll use the top side of this one, but I'll continue this across. You can see, same thing. Hit, punch through. We were kind of waiting for a pullback, and we didn't get it in this one, unfortunately, and it's continuing to push all the way lower. Again, 4-hour wise, this is what I'm looking at, kind of top and bottom wise, as far as where my retraces are, the 124.96 down to 122.46. Right now, it's off to the races. It's just falling right now. Gravity has taken over. I do think short-term targets need to be down here at 123.22. Now, this probably will slow down, but the euro yen does have some exposure to Brexit. Obviously, Brexit is leaving the European Union. So in the next 2 days, I do expect there to be some movement for this one. It will not have as much exposure as the UK will, but I do feel that it will be. I do feel that this will get a. I don't think it'll get a positive hiccup, but I do think it will help push us down. But same thing, if we can get down to this 123.22, it was a decent level. It was a retested level. There could be a pretty interesting bounce. If any of you out there, if you guys stay up or you try to trade the London Open, or maybe if you're from overseas and you're used to trading the UK Open, 3 a.m. Eastern time for the UK has been an absolute, the last 3 weeks, it's been like gangbusters for movement. If this does nothing but continue to drop from now till 3 a.m. tomorrow morning, at UK Open, if we're at the 123.22, this is a reversal opportunity. This would be a parabolic retracement back to the top side. And again, you can get a confirmation bounce, but if anything, again, kind of check out and see where your bottom levels or your spreads are. Look to see where your knockout bottoms are, as well as look at what some of the smaller duration binaries are looking like around that open. Okay, this is where you see those bounces when you come back in at the European Open. So this is one of those type trades. If you're up, check it out. Now the pound. The pound is moving. Now, why is the pound moving? Obviously, because of the negative interest rate. So we had mentioned last week that this 38 range, and again, there's a little hiccup here, but the 38 range is what we're looking for. We missed this one, this kind of line, by about 8 pips last week. Got so close. And now you're seeing it kind of rolling over and getting weak. And this is because of the statement earlier today about interest rates. Okay. Really, I mean, if you really want to go back to the start of the move, I don't know if you guys can see this or not. What did I just tell you? Let's see. I don't know if you guys can see this at the bottom, but here we are right now at 12 o'clock. This just happens to be right here is 3 o'clock in the morning. Okay. Remember in the last chart I showed you that if the price was coming down and fell into that green level right at 3 o'clock for the European Open, that's was like an amazing type setup. Here's proof in the pudding. We had a level. It had been tested and tested again, front run twice. It spiked at the open at 3 o'clock. This is the 3 o'clock candle into the level where sellers have stepped in, and then this is the morning. Okay. Bailey didn't speak till over here. Okay. Was this a good trade setup? Sure. Right. There's your 1 to 3. There's your 1 to 5. There's your 1 to 10. Okay. So I know in some of the broadcasts before we have talked about, I haven't talked about it, but I know like Dan, if you guys have heard Dan speak, he was talking about that there are knockouts out there, that they're setting up positions that are offering a 1 to 10 risk reward ratio. This is an example of one of those times where, again, if things line up, there was a lot of movement today. And what was the trigger? How do you find these going in the future? Well, again, if there's an area where sellers have stepped in and it coincides with the European Open, there was your result. And when I say this is a big one, this is 96 pips. 96 pips, right? That's a lot, okay? Go look to see what some of those shorter duration contracts are, the spread differential, as well as, you know, some of those knockouts out there. So again, these are perfect. So what can we do with it now? This is kind of an intermediary level right now. I would probably use top and bottom. Let's see. Yeah, I'd probably use the same thing. Probably here to here is probably decent as far as what we're using for the curve. You guys know that for me, the curve is kind of where my bias shifts from long and shorts, right? Right now we're smack in the middle, but if we can get much lower, yeah, I mean, there's some buyers. Again, this was a decent one. It was retested. I think we really have to respect that level. That one comes in here around 136-ish, 136.08, 136.00, around that level. Kind of the same thinking as the last one, right? If we can get down to this level where buyers have not only stepped in, it's base punched and then tested again, at the UK Open, this could be a good opportunity for a reversal, right? Why? Strong one-directional movement today, a base, and then a pop tomorrow to kind of retrace because nothing's really changed. I also do like this one long from here or even down here, the 134 level, because I do feel if we get an agreement, and it's not me, I'm not British, but if the UK and the EU come to terms with Brexit, I do feel like that is going to provide a big oomph for the pound, which would lead us to punch higher. And then again, the 138 level, could that be a turnaround point? It could, but I really feel like it's going to come up, it's going to base, and it's going to punch higher, and then we're looking for a momentum breakout. Harry Potter up in here into the 140 range. Okay, and again, that's a 200 pip mover. Brexit is big, right? But I do think that will provide enough catalyst to punch us higher if the terms are good. I mean, unless they do really, really bad terms, would that be kind of crazy? Pound, kind of the same idea. Okay, I don't need to do time on this one. You guys can see it again. What time did this happen? This one actually, I guess 3 o'clock. Let's see. This is 30 minutes. Let me go back to the hour. Okay. You guys can see that this one here is 12. Right here was the open. Okay, so you guys could have said lots of basing right here. Nice punch away. A punch up at the open. Again, 3 o'clock candle is right here. It's the green one, and there's your drop. So same, everything I just said is repeated. This was actually 112 pips. Go look to see what the 2-hour strike differential is on some binaries, and you tell me how much movement, how many strikes this covered, within, some of these candles, right? Just these two here was 40. Just these two right here was 60. Just the last 2 hours, another 40. So, tell me if, again, adding 2-hour binaries to your, your arsenal of trading weapons is worth it. And again, European open entry for a big drop. Same thinking, this one as well. I'm going to use this one here. I've moved this a couple of times. It hasn't saved. I'm kind of using this right now as, let's see, it needs to go a bit higher. I'm using this as my level of curve. And again, I'll draw it real fast for you guys. I'm looking for longs kind of in this region. I'm looking more for shorts here. Again, very emotional morning. It's literally 2 candles straight down. This is huge movement. We're kind of sitting smack in the middle right now. I'd like it to get the top or bottom before tomorrow morning. And again, looking for a Brexit, whether long or short. Great one to play with knockouts. Also a great one to play with those shorter duration binaries. Now looking at Euro Pound. Euro Pound, we've definitely had some, I'd say, decent movement in this one, right? Let's move this over. Pull this on the bigger time frame. Here's some of the stuff we had talked about, last week, right? Let's see. We'll kind of do a bit of review on this one. We had a small level here. We mentioned it. It was tested. It punched back up again. It hit actually a third time. This one didn't give us the typical entry that we'd like. This is one of the real reasons, one of the main reasons that I absolutely love Nadex. So this was a level here that we said, hey, listen, we had a nice drop, we had a base, and it punched down. Okay. And actually, you know what? This came in on the 7th, so you guys didn't know this one. You guys saw this one up here. This was, sorry, I misspoke. I'll explain this one in a second. This was the one that you guys were looking for here. Okay, so we were sitting right here. I'm sorry, right here is where we were sitting last week, and we talked about this 30-minute level. So you can see the level we did, it spiked up very, very fast. This was actually a U.S. Open-based trade where it dropped down. And again, that's strange to see this type of a punch up during U.S. hours. I do want to explain this one, though, because, again, there's some great opportunity, and this is something that I do feel like we will see because the Euro Pound is obviously a pair that's going to be affected by Brexit. Going forward with Brexit, and really in any of your trading, when you see patterns like this where we have kind of drops and bases and tests, this was a very, very fast one that we got great movement from. There's a couple different opportunities. This one here I wouldn't be using, but see this little base right here? I think that there may be some kind of, not secret, but like, I think that this is a potential level. Again, if it is timed correctly for another drop. This one I'm not worried about. I don't like the way that this one formed. I can't erase it, unfortunately. But I do think if we can get up into this level here, I do think there's an intraday short on this one. Now, is this a level that's going to hold with Brexit? Probably not. This is kind of like a more, if we push up, and again, a retracement of all the pounds today, if we can move up, I think 90.85 would give us a decent entry. Overall, though, again, this one has had so much movement sideways. I don't really love a lot of the ups and downs on this one. I think the euro dollar and the pound dollar, the euro yen and the pound yen are providing better trading opportunities. But right now, if you're taking really kind of the top and bottom of a curve, you could use this level here. You could use this level up here, 91.37 is again, a potential area for a reversal. It's happened, but as you can see, 1, 2, 3, this would be number 4 coming through. So it's not the cleanest of entries. Really, the cleanest is really sitting up here, the 92.07 and the 92.46. So it's of the 4 or 5 that we could trade Brexit with, this is my least favorite of all of them. You can see it's just really kind of bouncing back and forth, really between 91.37 and 90.28. Okay. Now euro dollar, kind of the same thing we were looking for. Again, here's you guys can see the curve drawn. We're sitting here right now. Let's see. Last week we were sitting right here. Okay. And we mentioned the higher end of this, right? And all we did was we had a parabolic move down. We came back up, we retraced it, and then kind of rolled over. So this one had a great entry coming over the weekend. And I know I mentioned this sometimes. It's not as much for you guys, but this was a absolutely textbook Sunday night gap. Okay. For those of you who don't know, the markets do actually open on Sunday nights. They are tradable, right? Well, we used this gap strategy in the upper part of the curve, looking to get bearish, and look what the end result was. A huge parabolic move to the downside. Now, this has just been an absolutely just crazy move. I'm not surprised that we're seeing some issues here. Again, we're back end lower on the curve. I would expect to see a bit of a retracement. This has been kind of the story for like Monday, Tuesday. The dollar kind of reacts from what happened over the weekend, and then we have a reversal. We're at a level right now. Again, it's 1 o'clock in the afternoon. You're seeing this kind of retrace. It's kind of in no man's land, kind of sitting here in the middle, right? I'd kind of like it to see it go a little bit lower before I'd be willing to go long. I mean, kind of levels, again, down here in like the 17, 14 range, I think are decent. Again, it's having some problems. Not surprised. I mean, this has really been morning, this early morning kind of 8 o'clock down. And since that time, we really haven't seen, it's slowing. So again, here is our 2 ranges. went slightly above last week, came back up and pulled it, and again, we're just lower. So right now, waiting for 1638, 1858, I think are the two best ones. There are smaller levels down here at 1714, as well as kind of where this gap was. I think either of those work as well. Way to play this one, guys, is kind of look to see where we're at the European Open. Again, Brexit, it's not going to affect it as much. But hey, if there's some type of stimulus talk, stimulus goes in. Again, maybe I missed it. Maybe stimulus got signed in the last 10 minutes. I don't know. Maybe. I don't think so. But if it did, that will drive us higher or lower and, again, play that parabolic move. But I am looking for a retrace of some type of basing. I'd like it to come lower. I'd like to look for some type of an entry down into here where buyers have stepped in with a retracement from kind of the lower part of the curve here, retracing back up in that direction is kind of what I'm looking for in this one. And again, adjust it according to your risk, adjust it according to your comfort level as well as your education. Dollar CAD. Dollar CAD just recently bounced. It's done it a few times. That's about halfway to profit. 31.05 is something we talked about last week. We did mention a couple shorts. It ended up just collapsing, didn't give us too many pullbacks. Dollar CAD's here. Watch this one for oil tomorrow morning. If you are in it right now, definitely make sure that you have covered your stop loss on this one. Again, it's tagged it a few times, so buyers are there, but it's still having problems punching a little bit higher. I'd say it's more range bound at this point than anything else in the hourly. On the 4 hour, kind of the same thinking. Look, it's kind of dropped, and again, we mentioned the 3106, 3105. It's where it's hitting right now. If we can get a decent rally higher, a green red, a pullback, and a punch higher, 3136 is, again, areas where we'd like to take target. It's all right. It's not one of my favorite right now. Dollar Swiss. Okay, dollar Swiss, we had this one drawn as well. Here's our curve from last week. You can see we came down and we tagged the 90.87. We're currently up on this one. It's up about 63 pips. Again, a little bit slower moving. I mean, we had a decent trend and then just kind of flatlined on us, and it's getting some movement right now. It's just, I don't think it hit it yet. It's super close to the 1 to 3, but it's right there. I think we will hit it. We're back in the middle of the range, so for me, dollar Swiss is not necessarily something that is tradable right now until we get higher. 92.26, 90.87, I think are good top or bottom. Dollar yen. Dollar yen was one of these ones, and as you can see, I left this on from last night. We ended last week at a level that we talked about, right? The 105.56. I didn't trade this one. I don't carry positions over the weekend. I was unable to get back to a computer, but it's interesting how this one started at the level we talked about getting long and then opened and shot all the way back up to the full profit target. It's funny how that works out, right? But I left that one on there just to mention that to say, hey, listen, this is a good zone, right? This zone has been decent. It was a bottom. It based. It came down at base, formed the top. And again, we're kind of sitting in that zone now. So I'm kind of waiting to see. And again, this is something a little bit slower, but waiting for this to kind of do a little bit of a pop, maybe a retest down again, and then a potential long again out of this level. But I really want to see what happens if we can get a decent kind of move up basing and then pull back. Not my favorite of trades. It's okay. Like I said, I think the indices and some of the other European pairs are providing better setups. But I know some people really like this one because it does follow the overall indices. Okay. Not my overall favorite right now. And again, I think 106.16 is a decent level. And I think the 105.01, if I was going to draw kind of a curve area, again, thinking shorts up here, thinking longs down here. And right now we're kind of sitting, kind of right, kind of close. We're sitting right here in kind of no man's land, sitting in the middle, right? We're sitting in this middle 33% right there. You can see the line going through it. Okay. All right. Gold, right? So what happened with gold? Where is gold? So gold is sitting right here right now, around 1891, right? We had marked off this level last week talking about 1930, and it came up, it touched it. I hit it a second time, and then it continued to fall, right? Gold has been slow, but why are we seeing this type of movement? Well, what did I tell you guys in the very, very beginning? Let's see where it is. What did I mention about CPI? What is CPI? CPI is it's inflation, right? Consumer prices account for a majority of overall inflation. Okay, it was 0.4. It is now 0.2, meaning that there's less inflation, right? Inflation is not growing at the same rate. It's actually slowing down. So what do we see? A drop in gold. Okay, that's why we saw the drop in gold happen. On an hourly, again, you guys can see that the 90.30 is something that we've been talking about for a while off this level. We were sitting right here last week. We're sitting right in here. So you guys saw this one from last week. I'll remove that. I thought I deleted that one, but I guess not. Let's delete that up. So there is your short. There's not much I can say to it. We are in levels where we could see a retracement right now. 1878. This is one that I have a very close eye on. If all of a sudden we get news and say, hey, stimulus check is in, we're good, expect to get some money, again, look for a pop-up on this one. So I'm using right now for my curve, here's my top and bottom. We are, as you guys can see, in the bottom 33% of this area, right, where we've had strong movement up, strong movement down. Like I said, catalyst for me on this one would be the stimulus is in. Stimulus is here. Now, tomorrow morning, the CPI number, the PPI number will also probably provide some movement. I'd like to see where we are. As fast as this drop, I wouldn't be surprised from now in the overnight, we continue to push a little bit higher on this one. Again, any talk of stimulus will drive this higher. Right now, I want to see where we are before I just take this one blind. I don't want to go long. Even if it's here, I'm probably not willing to go long just because with that number tomorrow, I have a feeling that it's not going to be as great for inflation as well. And again, I think it's more set up for a negative release, right? Pushing back down and we have some levels lower. So, and see where it is. But right now, that's kind of my short-term curve for gold. Silver, you can see the same thing. We had a level here. It did actually punch a little bit higher. So depending on how we time this one, right, depending on where this kind of top was, it gave us some entries. It's just following gold. I would say that it is still more or less kind of bracketed in here. Last week we talked about 24.95, and it kind of came up in base, and that's what it used to kind of form this, kind of drop back down again. I think right now for me, top and bottom, I'm kind of using this as my level. Again, strong movement here, strong movement up top. I do think that this one is got a little bit more room to run to the downside, and I'm using that for longs, and this is short. And really, I'm probably not interested in taking longs out of this one yet. I'd probably be willing to take a long down here, actually. I think that's probably a bit of a better area. This is kind of getting chopped up here a little bit as well. So bring this one over here. Okay. Last but not least, let me pull gold, or I'm sorry, oil. You guys can see where oil is real quick. Let's see, full featured charts. Let's pull this one across. All right, so from last week, I don't know if you guys mentioned this or not. We had been talking about this level up here at 41.23. Well, it did exactly what we said. It ended up bouncing off that level, not once, not twice, 3 times. So you got 3 different entries into this level to short. It ran actually all the way back down to this lower level. When we talked about the curve, here was the curve of what we talked about last week, right? Now, these black lines are other things I talked about. Here's those confirmation patterns. I said, hey, listen, where they're going to take a bounce, it's going to go higher, so they're going to base, or it's going to go lower, and that's all it did. Right now, going into tomorrow, it's got a lot of room to run either way. I would look at this area here. We got some basing around this $40.62. Doing the analysis on this one a day in advance typically is a bit too far. We got to see where we are. But if we're able to rally from now till tomorrow and we push up into the 41.25, I'm kind of feeling a little bit more short. If this kind of rolls because of the sellers here, again, I'm looking for kind of the same level of bounce here. And this level is 39.25 to 30.02, right? If we can kind of be here before news or be right below it before news, look for a pullback in either direction. So this is kind of, again, the level that I'm kind of using right now as far as where I think we'll be. It's kind of, I mean, as you can see, it's right in the middle of the curve. So it's kind of, I need that confirmation in either direction. But if we come up high, guys, it's going to be the same thing. Some type of a short position. And again, I want to see where oil is before, I want to see where oil is before kind of the news release. But if we can get back up into that level at 41.25, yeah, I'm kind of probably feeling more short, and vice versa. We got a lot of room to run to the downside before we get on a true kind of pre-market news. All right. Best way, drop down, look at your 30-minute, look at your hourly levels, look for basing and retests. It's going to be the best way to trade it. All right. So that's what we got for going on for oil. So a lot of stuff had to go quick. I wanted to make sure we got everything in our allotted time today. So for those of you that are our weekly followers, don't forget, make sure you mark off October 20th. Whew, around the corner on October, 12 p.m. Eastern Standard Time. If you guys have any questions, you guys are more than welcome to shoot me some email, support@keeptradingsimple.com. Thank you so much for joining us. Have a great trading week. Make sure you cover your risk and look at those 2-hour binaries and knockouts if you are not doing it already. You guys have a good one, and I will catch you next week.